My client achieved an 81% return on investment in just 3 years thanks to an off-plan project in Dubai. In this video, I reveal which developer helped him achieve this impressive capital gain in which neighborhood and of course on which project. I also explain how the choice of his unit was key to reaching this result. And of course, as always, I'll share the numbers with complete transparency with proof to back it up. We'll see how much he bought it for, how much his apartment is worth today, how much it's worth to rent, and of course, we'll look together to see if it's still possible to make this kind of deal in Dubai today. And if so, I'll tell you everything about how you too can take advantage of this booming market. Be sure to stay until the end of this video, because I'm going to explain how he pulled off this achievement and what strategies were put in place to optimize his investment. I'm Agate. I've been living in Dubai since 2013, and I've personally been investing for over 10 years in off-plan buy and sell projects. On this channel, I share my best tips for succeeding in this market and avoiding the pitfalls. By the way, if you're interested in off-plan real estate investment in Dubai, and like me as an investor, you're tired of talking to dream sellers who present you with numbers pulled out of thin air, and you want access to real information about this market, subscribe to my channel so you don't miss anything. Of course, this kind of performance doesn't happen every day. And if it was possible, it's because we had an exceptional alignment of the following criteria: a central neighborhood with excellent access, an unbeatable payment plan, and a unique apartment with a breathtaking view. This is a photo taken from the apartment's balcony yesterday morning. Not bad at all, right? I know you're all eager to find out which project is behind this amazing deal, but just a little patience. I'm going to talk to you about the neighborhood first. Once again, we're in Business Bay. However, this time we're not on the canal side, but at the intersection of Jafra Drive, Al Khail, and Ras Al Khor Road, which respectively lead to downtown Business Bay, Sharjah and Abu Dhabi, and Dubai Creek Harbor. The main advantage of this location is really the direct access via these roads. The proximity to downtown is about 3 minutes, and thanks to all the roads around, there's connectivity with all the other districts of Dubai. Besides the already excellent location of this neighborhood, I really want to emphasize its growing potential, especially thanks to the presence of the luxury SLS Dubai Hotel, which houses some of Dubai's most popular restaurants, including a Michelin-starred one. But above all, the construction of the ultra-luxury Burj Bin Hati Tower, in partnership with the prestigious jeweler Jacob & Co., was announced in November 2022. It will be the tallest residential tower in the world with over 100 floors. These two factors combined, the development of the luxury Burj Bin Hati Jacob & Co. project, plus the presence of a luxury hotel with a strong international brand like SLS, really helped to energize the neighborhood and drive up the price per square meter. A quick aside, as an investor, having luxury projects around your investment is extremely important because here, the price per square meter also depends on the neighborhood and the buildings you have nearby. Now, let's move on to the second factor that allowed my client to achieve such a spectacular return on investment. And the second factor, which is extremely important, is the payment plan. The developer behind this project is a company called Tiger. Once again, I'll give you a quick overview of this developer, but I won't go into detail. That will be the subject of a future video. So, Tiger is a local developer that has been in the market for about 40 years and has already delivered more than 200 projects. Financially, this developer is extremely solid, but let's be honest, their quality isn't great. But you'll understand why. Despite that, we still decided to move forward with this project. The big advantage of working with developers like this is that generally the prices are very affordable and the payment plans are really advantageous. In this case, the delivery was supposed to be in 2 years, but in the end, there was a 1-year delay and there was a 4-year payment plan after receiving the keys, with a long post-delivery payment schedule. This is the essential condition for my clients to be able to carry out their investment project. So we chose the Nobles Tower. Even though the quality of Tiger's finishes isn't amazing, at this price in this neighborhood, with these financing conditions, the risk was really extremely well managed. For those who aren't familiar with what a payment plan is, it's a payment facility spread out over time that the developer offers to the client. It extends over several years according to a schedule set at the time of purchase and sometimes continues for several years after delivery. Of course, it's at zero interest, and in some cases, the rent collected can even cover the monthly payments. Here, we're looking at a 6-year payment plan, with 4 of those years being post-delivery. This means they'll pay 40% of the apartment during construction and 60% over 4 years after delivery. That was the big advantage of this project, and it's actually why we decided to go for it anyway, despite the developer's reputation not being great in terms of quality. We had a product with an incredible location, a price that was unbeatable, and above all, the possibility to resell at the time of delivery when we had only paid 40% of the apartment. We knew very well that in that area, as I explained, we were going to make a huge profit thanks to the location, the affordable price, and the projects being built all around. And these criteria really allowed us to take the risk. However, there was still one more criterion to negotiate to be sure of making a good profit: the choice of the unit. Here, more than anywhere else, if you want to rent out and sell an apartment well, you need to have a view. The Nobles project is a 45-story building with an unobstructed view of downtown and the Burj Khalifa. But be careful, there's a small 22-story building in front, so you only get the unobstructed view starting from the 22nd floor. I discovered this view when the keys were handed over, but I had already visualized it during the sale 3 years ago, even though the first stone hadn't even been laid yet. And that's what's difficult but also essential when you buy off-plan. You have to go there, calculate everything, so you can imagine the finished product as close to reality as possible. Because in this case, if we had had a view of a building right in front, the resale figures, of course, would never have been the same. I'm putting the photo of the balcony back up here, just for fun. When you can get a view like this one, that's the one you should go for. Don't hesitate for a second, and especially don't choose the lower view just because it's a bit cheaper. Never do that, because if you want to rent out or sell your apartment quickly and at a good price, the view will make all the difference, and you'll more than make up for that investment when you resell. If you were in my client's shoes, would you have invested in this project as well? Even with the developer's average quality? Leave your opinion in the comments so we can discuss it. Now let's move on to the information you've all been waiting for, the numbers. My client bought his 2-room, 80 square meter apartment at launch at the end of 2021 for a price of €286,000 plus €11,500 in DLG fees. The DLG fees are the equivalent of notary fees and represent 4% of the purchase price, making a total of around €300,000. However, thanks to the payment plan, he didn't pay the full price of the apartment all at once. He paid 10% at the time of reservation, then 20% during the construction, which lasted 3 years, and then there will be 10% left to pay upon delivery, with the remaining 60% spread over 4 years. What's interesting here is that at the time of delivery in 2024, he will have paid only €125,000 out of the €300,000 total. Renting out an equivalent apartment in this neighborhood brings in about €28,000 net per year, with condo fees already deducted. So we're looking at a net yield of over 9%. That's not bad, except that my client at the end of the first year of renting will have paid only 50% of the apartment's price. So the net income compared to the amount invested at that point actually comes out to 17%. That's even better, isn't it? But the plan with this deal from the start was to take advantage of the favorable payment plan and make a good capital gain by reselling at the time of delivery. To date, my client has received an offer on the apartment for €400,000. So he has the choice between keeping it and earning a net return of 17% in the first year, or selling it and achieving a net return on investment of 81%. Both strategies are good and serve two different objectives. On one hand, you create passive income, and on the other, you grow your capital to reinvest in another asset. But then, is this kind of performance still possible? Absolutely. But you still have to meet the 3 key criteria I shared with you. Always keep in mind a central, well-connected neighborhood, an unbeatable payment plan, and a unique apartment with a breathtaking view. To avoid making mistakes and above all, to commit to the right project, I can't stress this enough. Surround yourself with the right people, with professionals in the field who are themselves investors and have been active in the market for several years. The Dubai real estate market is so dynamic that it's very important to have perspective and not base your analysis solely on the last 3 or 4 years. By the way, if you too would like to get personalized advice or learn more about how to invest in off-plan real estate in Dubai, feel free to contact me directly via the link in the description. And I'll see you soon in an upcoming video.